Hey guys, welcome back to another video, and today I'm here to show you the strategy that has given me returns year to date of 42.75%, 1 year of 68.79%, and then all time of 59.83%. So if you do enjoy this video, be sure to smash the like button. I really appreciate it. And also subscribe to the channel. We're almost at 220 subscribers. We're at 219 on the road to 300. Thank you guys for watching, and let's get right into it. So you can see I've had pretty decent returns over all time, but over the past year especially, I'm almost at 70% return. So I've almost doubled my money initially invested into the stock market. And you can see it wasn't always like this. So I was on a run for a little bit until January, a year ago from today, investing in 2024. So in January, I was up 24%, but then it was a rough April. I went down 11%. I was at $12,000. And since then, I've doubled my money. I'm at $24,421. It looks like it's gearing up to be a good day tomorrow in the market. Don't mind it. But yeah, this is a video on Sunday for you guys. So I want you to have this for Monday so that you can use it to invest, to buy new calls, buy puts, buy anything you want in the market. So there's a lot of things that go with this strategy, but I'm just going to break it down very simply to you guys. And we're going to use that example with one of my best performing investments, year to date, to say the least. This has been a very good investment for me, all due to the stock I got into, the price I got into it for, and how it's performing now. So it looks like it doesn't want to load here, but it should just take one more second. I might have to refresh it. But the stock that's treated me very well is AMD. This is Advanced Micro Devices, ticker symbol AMD. This stock is up a lot year to date, 38% to be exact. And you can see it was actually down 36%. So that's actually more like, look at this. It was $78. It's more than double that now. So if you got in during the lows, you're pretty lucky. But we can see AMD for me has returned 53%, $3.7 thousand. I'm at over $10,000 on this position, almost $11,000. By far my largest holding in the portfolio because of how it's performed. And the reason that I invested in this company is because the fundamentals of the company spoke to me like no other company, but the price was not matching the fundamentals. So I started investing in AMD right around this time, early 2025. It was around $122. I think I bought some up here actually, January. So I was buying AMD for $130, and I was saying, AMD looks like, their financial sheet, I looked deeply into that. They looked like an undervalued company, to say the least. So they looked very cheap. I was very happy to buy them for this price. And then they continued to drop. So when they got under 110, I said, okay, let me buy some more AMD because nothing's changed in their fundamentals. The company still looks exactly the same. They didn't even drop an earnings report or anything. So I'm confused why the stock is down. But I did buy AMD more when it dropped. I was like, okay, let me dollar cost average down. I still believe in the stock the same. And then it kept dropping. It dropped all the way, you could see, below $100. At this point, I was kind of questioning. I was, okay, is AMD the stock that I want? Looked at the fundamentals of the company. Nothing had changed. My consensus on the company was still the same. So I invested more money. I put more money into the company because no fundamentals inside of this stock, their company, their business had changed at all. But the stock price was dropping. So what was the reason for that? And then we see the stock had a rise. I was feeling good here. I was up on my money. But then AMD quickly dropped to $78. And I was thinking, okay, AMD dropped a lot. It's looking kind of hard to invest right now. It's hard for me to put money into a stock that's this cheap because I had money in it so much higher. My average cost at this point was probably around 115. So I saw it at 78. I was like, okay, I'm going to buy some more AMD. You can see my average cost is 110 now. They brought the cost down a little bit. Should have bought some more when it was this price, obviously, easy to say now. But nothing had changed in the company. No fundamentals had changed. I still felt the same consensus about the company. I said, okay, AMD, nothing's changed in the financials. Nothing's changed for the company overall. And no projections have been lowered. Why is the stock price so low? There's no reason. It's an overreaction in the market. So when it dropped to this, I said, okay, AMD, you're going to need to start picking back up for me to make some money. But I had no worries. I was thinking, AMD, everything's still the same. People are going to see that eventually. And so they did. This has worked out very well for me. A lot of the investments in my portfolio are working out pretty well. Stocks do tend to go up over time, but I'm not down on any stock in my portfolio, not to brag or anything. But a lot of the companies, if you do get in for the right price with the right risk mitigation, you can have very successful trades. And not all of your trades are going to be winners. I mean, AMD, I'm still holding long term. I haven't sold a single share, even though it's up so much. But not all of your trades are going to be winners. You're going to have some losers. There's going to be trades where you might lose 30%. There's going to be trades you might make 50%. So there's a lot of different ways trading stocks in the stock market can go. It's definitely a bull market right now. What I like to reference is the S&P 500. So they have their ETF SPY. This is a pretty good general, consensus on what direction the market is moving in. You can see it's up 8.5% year to date. And there was that little period in April where it dropped. It was down 16%. But now it's back up to 8%. So there's a 24% swing since then, at least. And yeah, I mean, what you want to look for is if the market is dropping and it drops stock. So for example, I talked about this in an earlier video, but something that happened recently, we can see with SoFi actually. If we go out a little bit farther, let's go to 3 months, we can see that SoFi, it hit 14 and then it dropped all the way back down to 12. Not that big of a drop for this company. But there was no reason for this drop. You should have bought SoFi at 14. You should have bought it at 12. The fundamentals are the same. And it only dropped because the market was dropping. You can see if you go to the year, let's check April. So a lot of stocks dropped in April, but it's just because stocks were dropping. So SoFi did nothing wrong in April for it to have this low below $10. SoFi was still the same company. They're still thriving. And you can see they bounced back very hard just the day after, April 9th. So April 8th, they were $9.50. And then they went up almost, 25% the next day on April 9th because they dropped for no reason. The stock market overreacted. The stock prices dropped an insane amount, and that's when you want to get in. When companies drop for reasons unrelated to how their business is functioning, that's when you want to buy the stock. That's a golden opportunity. So SoFi, I mean, nothing changed in the company. Fundamentals were the same. They were beating on earnings like they always have. And their stock still dropped. It dropped a very good amount. You can see from April 2nd here, it was up 64% all the way to down up to only 27%. Now the stock is up 187%. So if you bought it right there, you'd be up more than 100%. Which I was lucky enough to get into it right there because I had this investing mind already. And I already was thinking, okay, SoFi is worth a lot more than this. The stock market's dropping for reasons unrelated to SoFi's fundamentals, and they're going to bounce back. I feel confident in that. I'm going to put my money where my mouth is, and I'm going to invest in this stock, and it paid off. And it's not always going to pay off. Sometimes your stock is going to keep dropping, but if you do still believe in the fundamentals of that company and what they're doing, then keep investing. There's no reason not to. If the stock price is dropping for unrelated reasons to the company, like if the company has worse numbers, okay, the stock price should drop. If there's tariffs on that product, okay, that's short term, but the stock price should drop. Those are reasonable reasons for the stock price to drop. But there will be days when, AMD is down 2 or 3%, and that will happen a few days in a row, and there's no reason, there's no news, there's maybe people are selling, taking profits, but this is no reason that you should sell the stock, or, you can't have emotions when investing. It needs to all be logical and logic based. You need to make your investments based on, a thesis. You need to have an idea for why you want to invest in that company. And then you can value that company using whatever ratio you want to use. PE ratio is a good, simple valuation of a company. It's price to earnings. It's the multiple of those two. And that's a pretty good ratio to show if a stock is trading expensive or if it's trading undervalued. So, I mean, you can see like there's companies like Shopify that are trading at a PE of 100, which is very high. But in this space, it's not that high. And then there's companies like if we look at Cheesecake here, it's trading for a very low PE of 20, but in this space, that's a pretty normal PE ratio. So it all depends on the sector. You guys can look up sectors and what their PE ratios tend to be. You can see this is Amazon and Google are in very similar sectors, but you see Amazon's PE ratio is 37.75. And then let's look at Google right here, and they have a PE ratio of 20. So I think Google is trading undervalued. That's my opinion. But I do think that Google is a great buy right here. That's why I bought a good amount of it the other day, but I'm going to put more money in. I definitely do believe in Google a lot. Might even move some money around. I want more Google stock in my portfolio. I don't like it only being 2%. I want that to be more like 10 or 20. I definitely believe in Google very heavily. but I have videos on that. But yeah, I mean, you got to check the PE ratio. That's an important part of it, but at the same time, it doesn't always tell the full story. So you can't invest solely based on that. You need to look at the fundamentals, compare it to other companies, see what the projections are for the future, who their management is, what their numbers look like quarter over quarter, year over year. There's a lot of things that go into it, and I could make a more in-depth video on that if you guys wanted it. But yeah, I mean, there's a lot of things that go into this, but you also can't buy falling knives. That is where a lot of people fall into the trap of investing wrong with this strategy. So if we look at maybe, I mean, just for example, there's Lucid Group. So this stock has had a rough life. If we look at the past year, you can see they've been very up and down. But I mean, if you do like Lucid's balance sheet, then that's up to you. If you think that this company is undervalued and they are going to rise, then that's up to you. They haven't been for the past couple of years, but I know there are people that do believe very heavily in this company and think it's going to come back. So if you swing traded it right here, if you got it at $2 and sold it, when it was at the high of 348, you made out pretty good. But if you bought it at 348 and then you sold it at $2, or even when it was, almost below $2, you probably didn't make out that good. So you need to invest with with a thesis. You need to have an idea for why you want to buy that company. If you just buy a company because it's cheap, because the stock's $2, that's not enough. If you want to invest because there's a support level at $2, I mean, be my guest, but that's not enough of a reason for me to put my hard-earned money inside of a stock. You need to realize that all the money you put inside of a stock is real money. It's hard-earned money that you worked for, and you want it to work for you. So you need to put a good amount of money in to show a good amount of returns, but you also want to make sure that that's money you're fine with losing, because the stock market is not guaranteed. Even if you invest in an ETF, there's no guarantee saying it's going to return 10% a year. It's a pretty sure bet, as it's done for the past 100 years, but there is no guarantee saying that is going to happen. So you do need to be careful and use risk mitigation. You need to use risk adverse tactics when you're investing, and also take profit when you're ready. But I invest for the long term. I invest 3 to 7 years out, maybe even 10, 20, 30, 40. I never want to sell a stock, but if I have to sell a stock, I will. Like, for example, I bought a lot of Palantir a while ago, and I made out pretty good on that investment. It's up a decent amount. I got out pretty early, actually. I'm very surprised that it's gotten to this level. I sold when it was, around 120 down here. I was very surprised that it even got there, but it got to 160. So now if I held, I would have been better off. But at the same time, I'm satisfied with selling at 120. I don't have any emotion in this. I don't feel any regret or resent for when it comes to investing in Palantir, because I got rid of it. I can't do anything about it. And that's the mindset you have to have when you're investing. It's hard to do. It definitely is. There are times when you want to think, oh, what if I bought this company right then, and then I sold it here, and then I did this and that, and body yada yada. And there's a lot of things you could think about. But at the end of the day, you just have to be happy that you made money. I mean, if we go down here, how much did I sell Palantir for? I sold it when it was 112, 116. And if we go down, we can see I bought Palantir. I bought some contracts down there. But I actually bought Palantir when it was $21, $27, $24, $32. So yeah, you see I sold it at 79, 100, 112 I sold a lot, 116 I sold the rest. So Palantir was a great investment for me. I made money. I'm happy with it. I could have made more. I could have invested more, but I'm not worried about it. I made money and I'm happy with it. And now I get to get out of the company. I don't feel the same about it anymore. I do think it's overvalued. I think that it's a great company. It's worth a lot of money, but it's not worth as much as it's at right now. And I think that is purely momentum based, which is fine. I think that there will be a correction eventually. It's not going to hold these highs forever, but I am happy with what I made with that company and what I did during that time. But basically, the gist of all of this is that you have to invest in companies you believe in. If you are going to take the risk, you need to do the frisk, as I've seen people say before online. That is true, because you are like I said, you're putting your hard-earned money into a company that, I mean, they care about your money, but they don't really care about your money. They want to make money. That is their goal, but they can't force their way into making money. You have to, invest in a company you believe is going to do the right thing. They're going to make money. They're going to, keep building on what they have. They're going to treat their shareholders right. And that's why you have to do the research. You have to check it out, see, okay, is this company great for me? And I think I help out by being here. I'm going to give you guys advice on what companies to invest in. This isn't financial advice. I'm not a licensed financial advisor, but I do, a decent amount of research, and I think that my investment thesis is pretty decent. But I would say that you do have to do the ultimate, background check and everything and due diligence, do your DD on every company you do invest in, because at the end of the day, you are the one taking the risk. It's not me. When you invest your money inside of a stock, it's you taking that risk, which I'm happy for you. And I've taken that risk with a lot of companies, and I hope that it continues to work out as well, into the future. And I think it'll work out for you as well. I think the stock market's a great place to make a lot of money. And yeah, I mean, that's all I have for today's video. If you guys did enjoy, be sure to smash the like button. Also subscribe to the channel. We're almost at 300 subscribers. We're on the way there. And yeah, this is just a video about how I invest and how you might want to try investing. Just give it a try, put a little bit of money in it, maybe try with $100. Look at companies you think are undervalued, a place in the stock market, a sector you think is undervalued, a company, anything. But yeah, guys, that's all I got for today. Thank you for watching. I'll catch you in the next one. Peace.